Your business could be making millions in profit and still die next month. Why? Because profit is a promise, but cash is survival. The graveyard of entrepreneurship is filled with successful companies that couldn't make payroll. I've built and sold companies across multiple industries, and one thing remains constant. Cash flow is the oxygen of business. You can survive weeks without food, days without water, but only minutes without oxygen. Today, I'm revealing the exact cash flow management system that's helped my ventures survive market crashes, funding droughts, and indeed explosive growth phases. And I'm sharing my proven cash flow forecast template that you can download absolutely free. Stick with me until the end to grab it. After years of analyzing why promising companies fail, one thing became crystal clear. The most common cause of collapse isn't a lack of profit, it's a critical disconnect between cash out and cash in. This is still the silent killer of promising businesses. After decades of helping entrepreneurs and investors, I realize most people get this completely wrong. The truth is, revenue is for show, profit is for sanity, but cash is reality. You can't pay your employees with a promise of future revenue. You can't purchase inventory with a profit projection. You need actual cash in the bank. The faster your business grows, the more cash you typically need. This growth paradox catches entrepreneurs by surprise. You land that huge deal or major order, and suddenly you're scrambling to fund every dollar of anticipated growth. Top businesses secure 1.5x that amount in accessible capital before pursuing expansion. Successful companies manage cash flow proactively, not reactively. They maintain enough operating cash to cover at least 3 months of expenses, which provides freedom to make decisions based on opportunity rather than desperation. They restructure payment terms so that cash comes in before or simultaneously with when it goes out, like negotiating 45-day vendor payment terms while collecting customer deposits up front. The most effective businesses monitor cash flow monthly, ensuring they stay ahead of potential issues. They track 3 critical numbers: current cash position, cash coming in over the next quarter, and cash going out over the next quarter. Some create incentives for early payment, offering a 2% discount for payment within 10 days rather than 30 days to dramatically improve their cash position. Now I'm curious, which of these strategies would most transform your business right now? Drop a thought in the comments below and let's discuss the specific implementation strategies. Let me walk you through how to use the cash flow forecast template that's protected my businesses throughout every economic cycle. The template focuses on 3 critical components: monthly cash inflows, monthly cash outflows, and the resulting cash position at the end of each month. Each provides a complete 12-month view of your business's financial health. What makes this template powerful is its simplicity and accuracy. We don't project years ahead with questionable assumptions. We look at a practical 12-month horizon with concrete data on actual invoices, payables, and commitments. The cash flow forecast template helps you monitor declining cash runway, unusual expense spikes, delayed customer payments, and seasonal risk periods. Here's what separates amateur cash management from professional systems. Professionals recognize that cash flow isn't just about having enough money, it's about having the right amount of money in the right place at the right time. Let's address the 3 most critical cash flow challenges businesses face. First, the seasonal squeeze. Businesses with seasonal fluctuations often thrive during peak seasons but struggle during slow periods. The solution is creating supplementary revenue streams that perform counter-cyclically to your main business, combined with a disciplined approach to building cash reserves during strong periods. The second, the receivables gap. When customers pay slowly, but vendors want payment quickly, businesses get squeezed. The solution is systematically renegotiating payment terms with both customers and vendors to create a more favorable cash flow cycle. Third, trapped cash. Many businesses have capital tied up in slow-moving inventory, underutilized equipment, or services that consume cash disproportionate to their return. A quarter assessment to identify and release this trapped cash creates internal funding and growth without external capital. Here's a success story. A manufacturing mentee was growing 50% annually, but constantly faced cash shortages despite healthy profits. We implemented the cash flow forecast template to predict cash flow gaps before they happened. Within 90 days, their cash position improved by $427,000 without any new sales or cost-cutting measures, just by better managing the timing of cash movements. Here's what most financial advisors get wrong. They focus on historical reports rather than forward-looking cash management. Looking backward tells you what happened, but managing cash flow is about controlling what will happen. As promised, I've created a proven cash flow forecast template that will give you instant visibility into your business's cash position in the next 12 months. You can download it free from the link in the description. Remember, cash flow management isn't just about survival, it's about creating the freedom to make the strategic decisions rather than desperate ones. When you control your cash flow, you control your business destiny. If you found this video valuable, hit that like button, share it with another business owner who needs this information, and make sure to subscribe. We're constantly developing practical frameworks that translate financial theory into business reality. What's your biggest cash flow challenge? Drop it in the comments below. I personally read every one, and I often create content based on your questions. Thanks for watching, and I'll see you in the next one.